Hey Dennis, how's it going, man?
Good to see you, Andy. How are you?
It's good to see you. Hope you had a great long weekend, holiday weekend there. Did you do anything
Nice.
good?
Actually, no. It was just a slow and relaxing weekend, which I enjoyed.
No, that's really good. I had
How's
a
yours?
chance. It was good. I had a chance to. My daughter is out of town in North Georgia, my oldest daughter,
Mhm.
and we just drove up to see her over the weekend and had a cookout, a grill, and that's where I'm calling you from. Actually, not North Georgia, but I'm calling from her room, if you would, room office. So let's see.
Nice.
A triathlon bike behind me and a bunch of her books. So, but yeah, things are good. I guess what I'd like to chat with you about is oil. Oil had a significant drop today. Just doing some research and throughout the day, and they're saying it's because of the debt ceiling, which I don't buy. Excuse me, sometimes things just sell to be sold off, and that's what it looks like to me. And also, it's interesting to me, and I just want to get your thoughts. Is that I'm on just one website right now, Yahoo Finance, just to check out all the news, and it's very bearish right now, which I find interesting, which is a telltale sign, I think. But yeah, just want to get your
Mhm.
thoughts and what you think about oil right now and this drop that we had, and moving into next week into OPEC's cut. So, what are your thoughts, Dennis?
Yeah, as we talked about a week ago, we both kind of agreed that we're both on the bullish side of oil and especially oil stocks, energy stocks in general. I think crude oil and stocks kind of started to carve a bottom about a couple of weeks ago, and they bounced. They bounced nicely, but they sold off today, as you just mentioned. But I was trying to look for either news or the reason today, and I didn't find any. Sometimes it's just, to me, it looks like a bottoming process. Nothing ever, well, rarely does it de-bottom. So you're kind of starting to look a little bit, but maybe like a W looking bottom. So today's drop is just another drop. It's basically short-term kind of movement, random movement. I didn't see any major news from OPEC or from anybody else. I think it's actually a buying opportunity. As far as commodity itself, with crude oil, and I looked at natural gas and looked at heating oil and all that. And I looked at commitment of traders reports, and I look at what commercials are doing, people who are involved in the business, the producers and direct users, and they're becoming bullish, which is a good sign. So you can see in the commitment of traders report, they're becoming more long, or in some cases less short. So while on the other side, you got speculators who are becoming more short. Usually it's a bullish sign. It's not an immediate buy signal by any means. Usually you have to take a few weeks kind of a long approach, but it's very encouraging. Technically, I see divergences, bullish divergences on just the basic indicators. You look at your, without going into complex ones, you look at your MACDs and RSIs, and I can see some bullish divergence there. The volume is good on the upside, better than the downside. That is a good sign. So as far as commodity itself is concerned, I think it's a buy, like around 70 or upper 60s, or where we are right now. I think I think it's a good buy, at least short term, I believe, and it might set up a good long-term opportunity as well. I know we both have strategies on the long side in bullish names, in bullish name in energy names. And as I mentioned before, they're extremely cheap and they're making a lot of money. And I looked at ExxonMobil today, Schlumberger, and they sold off for basically no reason whatsoever. I think it's a great buying opportunity. Look at their PE; it's really cheap, really cheap. And I would be a buyer of calls without going into complex strategies, maybe 3 to 6 months out. Even short term, it looks good, and long term, I think it's a buy if you buy the underlying stock. These are just two names that I mentioned, the big ones. There are a lot of small ones that look really attractive at the moment. I think we're carving out a bottom. We talked about technicals on XOP, the index. And we talked about, that range between 110, 120, where it used to be like the tops and then a bunch of bottoms at the same level. We're right there. So it's a huge support. I don't see it breaking on the downside. I think it's the right time to buy. I did some buying last week, as we discussed, sold some puts. So if they go a little bit lower, it would be put to me, which I'm absolutely fine with. I think today's sell-off is a buying opportunity. It's pretty clear. Nothing is guaranteed, but it's looking good. It is really looking good. So I like it.
Yeah, I would agree with you. I was probably about a week early when I texted you. I don't remember what day, Thursday or Friday. I said I think we saw a bottom, or we're in the process of it. I don't know my exact words, but we had that sell off today. But I sold some puts last week. They got some good premiums, and if I get put, and it was on equities and the equity side, and if I get the stock put to me, I'll be very happy. So no harm there. But a real quick question: two things I see though that I want to know your opinion on. Number one is, what exactly, just for our listeners and viewers, what exactly are you looking for in the commitment? What is the commitment of traders? If you could explain that, and then what exactly extremes are you looking for?
Commitment of Traders report is what CFTC reports. It's a government organization for trading futures. And if you trade more than a certain amount, if your positions are more than a certain amount, it doesn't apply to retail traders. It's primarily institutions. Either they're commercials. Give you an example, in agricultural business, they're farmers, right? And they're Kellogg's of this world, who buy that. They know the business, they understand the business more than anything else. The same thing applies to energy, for example, or anything else. So the largest ones are commercials because they have to hedge their positions. That's their physical commodities. And then they divide it into several categories. The first one is commercials. The second one is large speculators. These are primarily, they're the banks, so big hedge funds. They have to by law report their positions in futures if they're larger than a certain amount, and those amounts, number of contracts are huge. And the third ones are, they call them smaller speculators, but it's not just individual traders. So there's smaller hedge funds, let's put it this way, or CTAs, so on and so forth. So if you look at the long-term history of it, the commercial traders are, let's call them the smart money, just like I mentioned, because this is their business. They don't do anything else. They don't speculate, like, for example, you and I speculate. This is their business. Right. The farmer has to hedge the crop. The producer or explorer of oil has to hedge the oil, and so on and so forth. So they're they consider smart money, and if you look at the long-term charts, if you see them being long commodity, that's usually longer than smaller speculators, let's put it this way, then it's a bullish sign, and the opposite is true if it's on the bearish side.
So you're just looking for extremes on one side or the other, correct?
Yes, correct. When they are really becoming bullish or really becoming bearish, it's never a short-term sign. So if you want to day trade crude oil tomorrow, there's nothing to do with it. Yeah. But looking forward a few weeks, maybe a few months, I think it's a reliable indicator. And it's been helpful for many traders, and it's good to look at. And I see something in energy. They're not extremely long, but they're getting to that point. They're getting long. I think they see what we're describing. I think they anticipate higher prices in the commodity, and therefore the equities, the energy stocks, which are highly correlated to commodity, I think that's another bullish sign for them, considering where they are technically right now and fundamentally. So
yeah, I mean,
there's a confirmation.
Right, you got to. And kind of to work with that, one of the things I do is I just try to look at headlines and see, and do the opposite. Not that that's my only indicator, but just see what the press is saying. And some of the headlines I'm reading about, like from thestreet.com, here's the truth about oil that no one saw. That article is basically bearish on oil. U.S. crude from the Wall Street Journal. U.S. crude dips below $70 ahead of OPEC meeting. If you read that article, it's bearish. CNN, U.S. oil prices sink below $70 a debt ceiling jitters and Russia-Saudi tensions happen. So again, a bunch of bearish articles, and it just really works well with what you're saying with the commitment of traders. If it becomes an extreme, it's usually do the opposite. One of the things I wanted to ask you about is, and I'm agreeing with you, I'm long equities, I'm very bullish on equities, but I am negative. I don't know how, I would say moderately negative the S&P. How does that work? So if the S&P sells off, wouldn't these oil stocks sell off even more, or how do you play that or see that?
I mean, I'm as well. I'm getting even more bearish on the S&P 500. I'm not permanent bear by any means.
Right.
Lately, I'm getting more and more bearish. And if I'm right, and if S&P goes down, usually takes everything with it. But take a look at the last year, where the bear market started right in the beginning of 2022, right?
Yeah, I'm pulling up a chart of the S&P right now.
Yeah, and S&P, I think it started in January of last year, right? And the S&P went down pretty significantly, what, 25% or more. And look at what crude oil stocks did, energy stocks. They went straight up.
They went up. Yeah, you're right.
I mean, completely different. Yeah, completely different direction.
Great call. I didn't realize that.
Yeah, of course. There is always an industry or two or sector or two that define the market and go in different directions and things like that. I think even if S&P goes down, of course, it takes just about everything with it. But even if the energy stocks sell off, I think they're going to hold much better than other industries. So the articles that you mentioned, for example, in different newspapers and websites, I think it's a reflection of just a bearish sentiment. The only reason I can see crude oil going down if we are going into like a deep recession and the demand goes down significantly.
Right.
It can happen. I don't see a deep recession. Yeah, there are a lot of indicators, the leading indicators that point to that, or at least point to some slowdown. And I believe we will have slowdown. But a severe recession, that demand just slows down so dramatically that nobody needs crude oil and it goes down to 40 or something. I don't see that yet. So some volatility possibly, but I think it's fine. And as far as your question about S&P 500, I'm not bearish necessarily because of fundamentals. Well, macroeconomics, obviously the interest rates are much higher, and a lot of pension funds and a lot of big funds are saying, why would I be invested in something really volatile with unpredictable returns, talking about S&P, when I can make 5% in treasury and it's guaranteed and I don't have to worry about it. And that's why a lot of pension funds, they start allocating more and more capital towards fixed income. Well, you get a good return, you have no volatility whatsoever. And that's one thing that, from a macroeconomic standpoint, it's bearish in S&P. And I understand we can go into recession and slow down and all that. But what bothers me the most is I'm a student of the stock market and stock market historian. And if you look at the internal indicators, internals meaning you look deeper than the chart of S&P. You look at participation, how many stocks are going up with it, what sectors are leading. There are many indicators like summation index and McClellan oscillators. And you look at new highs, new lows, the breadth of the market, advanced decline lines, and things like that. That's why they call internals. So, and they are horrendous. I mean, I saw things like that. You see it once every few years that they're that bad. And the last time I saw that, probably 2015, right before we sold off at 10 or 12%. The worst two cases I've seen, one was before my time, in 1972, 73, used to be called Nifty 50. When out of 1,000 stocks, only 50 stocks were going up, the rest were going down. And after a few months of that, it was followed by one of the worst bear markets in history, 73, 74,
Right.
where when S&P dropped more than 50%. Another famous example is late 1999, early 2000, when
We were trading that together, I remember.
oh yeah, exactly. When NASDAQ stocks and a few of them, dot-com bubble continued to go up, and everything else was already in bear market. So in the severe bear market, and how did it end? And in the next 3 years, S&P lost more than 50% again.
Yeah.
And I'm looking right now at, I don't see the charts in front of me, but I encourage viewers to take a look at S&P, right? You see the chart, that's SPX, and let's look at the chart of equal weighted SPX, meaning every stock has equal weighting, and it's a totally different story. It's going straight down.
Yeah.
You look at small caps; these are 2,000 stocks. They're practically at the low of the year. Believe it or not, they are. We look at IWM, the low of the year. S&P is making multi-month highs just a couple of days ago. I think even today, there are more new lows on the New York Stock Exchange than new highs. So it's just a number of mostly high-tech stocks, because they have such a huge weighting in the S&P and the NASDAQ 100, they're holding everything up. And I don't have anything against these stocks. I love those companies. I mean, the Apples and Googles will use their services and products. I love them as companies, but as stocks, they're becoming extremely expensive. And I question why other stocks are not participating. And it just about always ends bad, like their market type of badly. So you look at summation index, and it's going down during the rally. That rarely happens. Rarely. So it know how long it lasts. You and I both remember 99 and 2000. We traded together, and it lasted a few months. Sometimes it just lasts a few days, but it's just something that you rarely see. So the strength is hidden.
Well, to support all that, not to interrupt you, I read an article earlier today, and it was spun as a positive thing, but it talked about, I think it was a Yahoo News article, finance news article, and it talked about how their rally is comprised of these great 7 stocks. And again, the spin was there's 7 stocks that are making you money by these stocks, as opposed to a negative. So what we're doing is showing the negative breadth, but it's also the negative, the positive psychology, which is also a negative in real terms. Also,
I can spin it. I can spin it a positive way, but the history tells me otherwise.
Yeah, exactly.
Every time you see it, it ends up. There's always. It's never. Nothing is a perfect indicator, but you look at around that participation and everything. It's like I've never seen it end bullishly. So it ends ugly. So that's Sorry, I interrupted you. Go ahead.
No, it's interesting. And another about oil, I remember, and I was Googling The Economist. I remember it was 1999, right before we started working together. I think we started working together in the spring of 2000, if my memory serves me correct. But this was March 4th, 1999. And the article was Drowning in Oil. And it was the cover of The Economist, basically saying how, and I want to say oil was around $14. And the oil market collapsed right after this article to, it was around $10, the collapse. But that was literally the bottom of oil, because I remember when you and I started working together, oil was trading in the high teens to 20s, and it went straight up literally over the next several years from there. Well, a good 45-degree angle. So I would just, again, when I start seeing, as you do, just seeing all this bearish sentiment or bullish sentiment in the opposite direction, I really want to take pause.
It's easy to, when you see an uptrend in anything, commodity, stock market, and it's going up and up and up, it's easier to become bullish. It's like, all right, well, it will never go down. The same thing on the downside. The lower certain things go, it's like people get discouraged and people find a reason for this. And but when you see more and more of those articles and opinions, then you take a contrarian approach at some point. And you're absolutely right. I think it's time for take a contrarian approach on energy in general. And I'm becoming more and more bullish. I'm already long. I know you're long as well. And I'll be adding, and I'll be picking my spots, whether it's short term where I trade for a month or two, for a couple of weeks. But yeah, I want to hold them, not just short term trader in me is one thing, but investor in me, I want to hold them for macroeconomic reasons, for fundamental reasons, for valuation reasons. And I think we're at very good price to get it. So, yeah.
I would agree with you. Now let's talk about gold and silver. We both like gold and silver. I would say that I'm not married to either, but I do like it. I think they should be in everybody's portfolio. But offline, you mentioned that we might be getting ready for some of a pullback. Talk to me about what you're seeing in gold and silver.
We just had a pretty good pullback. Nothing wrong with that. I think both commodities are in the bull market. Unlike energy, it's not necessarily a huge buy signal. So let me take a look at one thing. It's I see nothing wrong with the pullback. I think it's kind of a buying opportunity. I'm looking at gold stocks, like GDX, which went from 200-day moving average. So,
I'm sorry, Dennis, broke up. Say that again. Last 5 seconds.
Last 5 seconds. Hold on a second. I'm looking at price of GDX, which is a gold stock index. So it's sold off. It's a volatile index, so there's nothing wrong with that. It is approaching the 200-day moving average. It's getting oversold. I think even on the short term, it's kind of a buying opportunity. I don't see any problems with the commodity. I don't see any problems with equities on the precious metal side. I like silver even better. I looked at the commitment of traders. It's not as bullish as I would like to see. So it's not. There is no clear buy signal like we compared to energy stocks. So maybe it's going to be like a trading kind of opportunity we're getting there. But in general, I don't see fundamentals getting bad for oil, for gold and silver. I think the demand remains high. It's a good hedge for current against currencies, fiat currencies in general. I don't see any problems. A good hedge for geopolitical tensions and the wars and all that we have in Ukraine. So the pullback is a pullback. So I'm not too excited about it, but longer term, I'm bullish, and I'm bullish especially on equity side of precious metals. There are a lot of great silver stocks. I have to research them a little bit more, but great silver and gold stocks that are, I think, wonderful investment opportunities.
Yeah, I got a couple handful of them in my portfolio. But yeah, I would agree. I think we're kind of in no man's land right here. One of the things, and you might not have an opinion on this, and maybe we can talk about it next week, is one of the things I'm interested in is copper, and copper equity specifically. Do you have any opinion on copper right now? I mean, we might go lower because if we have an economic slowdown, which is usually copper's, again, the biggest industrial metal. I believe it's the biggest industrial metal, but fundamentally, I believe it's very undersupplied. So when things do shake out, whenever that is, whether that's this fall or this coming next year, I think that's a great place. That is a potential great trade. What are your thoughts?
I completely agree. I mean, usually I'm bullish copper. Copper acts sometimes as a leading economic indicator. So I wouldn't be surprised if copper corrects. It depends on what's going on in the economy. If we are going into slowdown or some sort of a recession, copper will probably suffer a little bit. But yeah, it is undersupplied. Exactly. It's this commodity will be in good demand unless we are like in horrible economic conditions. So I would pick my spots. Yeah, it's one of those commodities that I like. But you have to pick your spots. So because it's volatile, if it goes down,
yeah,
you cannot just hold it forever. But overall, yeah, I think it's the commodity that I'm pretty much always interested in. So.
Yeah, me too. I don't have any right now or any equities right now, but I'm looking at some companies. I'm looking to, again, to see what the S&P does. I will probably add just at time, meaning a time duration as well as a price. So if we correct more and then if we correct more, I'll probably add in the fall. If we don't correct, if we stay around these places, I'll probably buy probably fourth quarter. Going into the new year, because then we didn't get the correction that we were looking for. And then I think it's just a great buy, but that's really my opinion right now. Any final thoughts? Yeah, go ahead.
Also about copper, I would just like you mentioned, it's not just the commodity itself, but there are some companies, so equities that would benefit the most. And I think they're not expensive at all, just in case of crude oil stocks. So even if copper goes, they might suffer, but they should be okay. And therefore, I would be even more interested in them than the commodity itself.
Got it. Okay. Yeah. Any other final thoughts here before we talk again next week?
Final thoughts, just to get more bearish on S&P. I don't get bearish too often, so because on the stock market in general, I believe it's great wealth creation, and long term we should be fine. But based on the indicators I mentioned, it doesn't look good at the moment, intermediate term for the next several months. And I don't know if you were inclined to be short the market, but I would not be too long. So
got it. Okay, I would agree. Okay, well, thanks, Dennis, and we'll wrap up, or we'll see you again next week.
Thank you, Andy. Pleasure always.
You bet.